In the meantime here, I want to draw your attention to the corner of Wall and Broad. Famed investor David Tepper probably is not helping the situation here, saying that he still thinks this market is very, very overvalued here. A lot of people, kind of share a view here that we got a little ahead of ourselves here. That's in the eye of the beholder, of course. Let's see, Scott Martin agrees with that. Now, Scott Martin, a lot of folks are looking at this and saying, all right, we had run up pretty far and fast from lows reached a little more than 5-6 weeks ago. We were due for this. But then you hear people like Tepper saying, well, we're due for a lot worse than this. Where are you on this?
I hope not Tepper's camp, Neil, and not really more so that. But one thing that we do have to consider, which you mentioned, is we had a historic drop, 30% or so off the all-time highs in a matter of a month, and then a pretty nice rally of about 30% or so, depending on your favorite index, in about a month and a half. So it seems to us, given that the economic data is worsening, that the Fed may be stepping back a little bit on the dovishness, say the liquidity that they're going to provide here, that the market should take a breather here. I mean, anytime we have these kind of moves, there tends to be air pockets or so in the markets and in price that tend to push up or push down the market action. So for us this week, we've actually been putting on some pretty defensive positions, Neil, in our portfolios, which is documented, by the way. So the fact that we can actually maybe take advantage of what's going to be a just kind of meandering, if not slowly slumping market in the next couple months as data continues to come in here.
It's interesting. We always like to step back and see valuations on these markets. And, I don't go into them quite to the detail or near the detail that you would. But it's definitely a lot less expensive than it was before all this started, even with the comeback. And yet you have folks like Tepper and others arguing, that this is akin to what we had going on in '99. That seems to me to be a bit of a stretch, but what do you think?
I believe it's similar in some ways. There was euphoria to some degree, and then there was some fear and panic similar to '99, which, if you believe it or not, I was part of that market and trading it and investing in it. I know that's hard to believe looking at me, but it's true. But similarly so, I've been through about 3 or so recessions since then, or three or so market busts that are similar to '99 since then, Neil, leading up to this one. And it's something interesting, too, that Chairman Powell said today, which he's correct about, is that a recession like we're in now, which by definition and feel is here, we at Kingsview believe that there's also going to be jobs, which and there's there's growth that's going to be pulled out of the economy because of the recession. What I think Powell is incorrect about, however, is he talked about ingenuity, as you talked about with Edward Lawrence just a few minutes ago. Ingenuity actually is going to be created out of this recession. There's going to be opportunity and things that we haven't thought about before they're going to come out of this recession, which is kind of the silver lining, in my opinion. But first, the market's got to come to grips with that destruction that's going to come out of this firsthand, and then that's going to show up in lower stock prices, we believe here.
All right, we'll watch it very closely. Thank you, my friend, very, very much here. You might have noticed that the market is